Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's update our view on euro currency. So as you know, on Friday, this was really surprising explicit comments from the Fed chairman on the rate hiking in March. So on Friday morning, when we have discussed the situation, we said, well, theoretically it is possible if these lows will survive for some reason, but on Friday morning it was sort of unexpected what really could happen, and mostly we start to think that this hand shoulders pattern probably is doomed. But Miss Yellen has worked as the little wizard and bring the last hope to the bulls. In fact, it probably indeed the last chance to trigger upward action with this reverse hand shoulders pattern. So you can see in this unexpected clear comments on the possible rate hiking in March, as you can see, has triggered this upward action. So currently, this action mostly has the technical issue because this is just the profit taking on anticipated pricing in event. So when it has got the real confirmation, investors turn to taking the profit on this event, because from the fundamental point of view, the increasing of the rate is the supportive to the United States dollar. And in the long-term perspective, this will be definitely supportive for United States currency. So, but things that has happened probably leads us to spend the time with the common week with the analyzing and working with this upward action until Friday, at least until the Friday, because actually, guys, I'm really fascinated what will happen if the non-farm payrolls release will be poor. So what turmoil will be triggered on the market and how it will impact on the Fed decision. Of course, we could suggest that probably if Fed has given so clear comments, they probably already knew what numbers will be. Hardly it will be a surprise for them either, but still, who knows? That's the major tricky point that we could meet on the common week. That's Friday. Until Friday, probably some upward continuation could continue, and this will be driving by the strong impulse that we've got on Friday on this upward action. So on the daily chart, actually, this jump doesn't bring something really new because our pattern is still in place, the hand shoulders is still in place, lows are survived, and so we will work with this upward action. So here we could use some indicators to limit the objective points that we will take in our consideration. So for example, this level is not interesting for us on the common week, although this is important, and weekly chart shows that market could show even these A, B, C, bottom D patterns reach as high as 110 area. It's based on the picture on the weekly chart. But guys, all these levels stand above the daily overbought. That's why they are not interesting for us, because they hardly will be reached in the common week. That's why first objective points that we will be watching for stand below the 107 area, or stand somewhere around it, as they will be actual for and valid for a common week. So trend has showed bullish here, as you can see. So let's see what we'll have on intraday chart, because it seems that the intraday charts will become the major pictures for our analyzing and analysis and trading on common week. We have some different patterns. So first pattern we said we have on the 4-hour time frame chart. We even have talked about it. If you remember on Friday in video, we said that if somehow these lows will survive, in this case maybe market will get the chance to form the butterfly. But as we said, we do not see the reasons how this could happen, because it was just impossible to suggest on the Fed comment. But as you can see, miracles sometimes happens, and market indeed shown classical breakout. On the way down, market hasn't quite reached the lower board of the consolidation, turns up. This is usually works as the first bell of the possible upward breakout when market is unable to reach the opposite border of the consolidation, turns earlier to the upside. Now we see that breakout is taking place here. The butterfly is 107 target stands at 107.26, very close to the 107 fib resistance. But right now market stands at 3.8 level that already has been tested. So on this way down, market already has touched the monthly pivot point and 3.8 resistance 106.20. Turning down again, that's the second challenge. Here, guys, we should watch for reality of this breakout. So we do not need to see true significant return back here. As we will show a bit later, we could accept retracement back to 105.60 area here by some technical reasons, but we need to market to hold above the weekly pivot point on the hourly chart. It would be better if market even will continue move high and just retest this broken area. So we will see what really will happen. But anyway, that's the pattern that we will be watching for. It's approximately 107, 107.25 areas could be reached. Next two pattern stands on the hourly chart. The larger pattern is the double bottom, as you can see. It has approximately the same target or even slightly higher, so you can see 107.60 area approximately could be reached by this double bottom. That's why it's not really very interesting for us right now on Monday. So maybe later we will return back to the discussion of this pattern if market will really continue move significantly higher. But first, guys, I think that we could focus on, at least on the Monday, we could focus on this potential head and shoulders pattern. As you can see inside the double bottom, the second part takes the shape of the head and shoulders. Also, you could recognize here the butterfly that we have traded the previous week. Very often, as I said, the butterflies become the part of the head and shoulders. So you can see this could become the left shoulder head. Right now, market should form the right shoulder, and that's why we could accept some minor retracement here to weekly pivot point area. It could become the right shoulder of this pattern. This pattern, guys, has the first target around weekly pivot resistance points 106.70. So if we will suggest that market will form A, B, C bottom somewhere around the bottom of the left shoulder. In this case, the ABCD will bring us to 106.70 approximately. We will make the more precise calculation when the right shoulder will be formed. So what particular pattern will market start to develop? It's very difficult to suggest because with this double bottom, market just could break it up and continue move higher. So that's also possible. So we will see what will happen on Monday. So if retracement indeed will start, we will focus on the head and shoulders. If market will break this area and start to move up, two major patterns that will be watched for is double bottom and butterfly here. So that being said, our trading plan on Monday suggests first watching for the head and shoulders and controlling the possible retracement here. So on the way down, if it will be formed, indeed, we will focus on the head and shoulders. Second stage will be the extension to this area. That's the trading plan for the Monday. So as soon as it will be completed, or if market will choose some another way, we will turn to double bottom and butterfly patterns. They just have a greater scale. That's why I think that's better to focus first on the closer targets that could be reached with more probability. And later, when and if they will be reached, we will turn to some more extended targets. That's why I really think that the head and shoulders pattern is the pattern that we should watch for the first time, the first place.